Good morning, everyone. I'm Candace from Futures Beginners. Today we have a beautiful A trade setting up. Look right here at the dots. Let's take him down. This is the ES, and it is now March 18th. And look at him go. Beautiful A trade. I'm going to teach you guys how to identify this stunning A trade. What's an A trade? Failure of price action at support or resistance in the direction of the trend or the counter trend. The trend is kind of I'd say it's an uptrend. You could see by the regression channel, so it's a counter trend. Two contracts on this ES. Look at him drop out. I mean, he just gives it to you right at the dots, guys. That's the reason why this system is visual audio clues that you see the dots, you see the direction of the trend, and you pull the trigger. You execute effectively. Look down here. Can you see this little number down here at 2352? You're seeing it right over here. This is where ES was earlier this morning at probably 4 o'clock in the morning. This is where he's headed back. It's 34 ticks away. Is he going to make it? You're darn sure right he's going to make it. Are we going to give up 65 ticks? No, we're going to bring our protective stop down to 8 ticks away. See this little one over here? 8 ticks away. And look, now we have 90 ticks on this one trade. This one good trade is all you need to know. And now we're going to take our profit here at 70 ticks. I'm not going to let him take that away from us. So we're going to manage him right here on this, right here at the bid. There you go. Up 57 ticks. That's great. I'm going to take you from zero to hero today and show you how to make money with these beautiful indicators. Hold on. I'm going to go find another good looking A trade and I'll be right back. All right, here's a beautiful crude trade. Look at him, crude at 23.46, unbelievable. I'm going to wait for my Roberto, my entry signal, to tell me to get into this trade. If I don't get Roberto, see how he tells me to go up at this point, and he tells me to go down over here at this point, at the highest. What's an A trade? Failure of price action in this particular instance. In a downtrend, I'm going to take him down, black air, all the way down to 23.21. However, I'm not getting a Roberto entry signal yet, so I'm going to have to just sit on my hands and wait. Once Roberto fires off, then I'll take crude down. But right now he's not ready. Let's just wait and give him some time to get into position, and then we'll take him down. But remember, you always have to have an entry signal from the computer. This computer program is our proprietary software that tells us when to get in the trade and when to get out. So that's going to protect you from getting into DNF trades. This is a good looking A trade right here. What happens when an A trade fails? Look for a big run reversal in the opposite direction. So this crude stir is going to run up to here, 23.76. That's not my trade. That's not my specialty. My specialty is waiting for him to roll over and die, as I say, and I'll take him down. But I'm not going to chase him at the top of a down channel for a few ticks north. That's a D or an F trade in my book. Let's just wait for him to fail here. All right, here is a continuation on the NQ. They tried to take him north. He's in a down channel. He's right here at this level. I know he's coming down here to 7031. Let's take him down. We have 575 on the dashboard. There he goes. He hits us. Move this one down. Oops, hit us so fast. 815. See that? He's moving so fast. Let's take him down again. Right? This little diamond that went off is our double DMX. Let's sell him again. He's moving too fast. See that? All right, let's get this out of the way here and get that out of the way here. Get it up above that.
Enter NASDAQ.
All right, it's coming on down here. It's going to be 150 ticks away. Are we going to get that? You're dang right we are. You just have to be careful. You can't have really, really tight stops on these guys when they're moving like this. You just have to let them go. Let's try again. Get another one. Oops, there he got us. Okay, so 112 ticks. Now, he's going to come back up here. He's moving so fast, we're not going to take that one short. That was a continuation. We knew he's coming down here to this S1. How do we know that? That's what they do. But now we've got 112 ticks. We're going to protect that. Let's go look for another A trade. Here we have crude reversing here right at the dots, top of a down channel. Background stripe going. Let's take him down. We have 1125. Black air all the way down to S1, S3 over here. Good heavens. Look at him. Okay, here we go. Now, reduce the risk, increase the size, add 2 more on. In order to trade 4 contracts on the crude, you need $1,000 per contract plus a cushion. So in order to carry 4 contracts, you need about a $4,500 account. In order to make, we're going to 20 ticks down, 4 contracts. Let's just watch him go. He's coming back down here to 23.22. Good heavens, crude's really, really low, and the equities followed the crude. Let's watch him. Beautiful A trade. Good looking A trade. What's an A trade? Failure of price action. You guys know price action is in the candles, the footprint in the candles. Failure of price action at support or resistance. This is resistance. Look, he hit the 50 up here. This is the 50 moving average. He, meaning the crude oil, hit the 50, couldn't go over it. It's a down channel. He's in the direction of the trend. There's nothing prettier. There's black air all the way down. We're going to watch him drop. Here he goes. Here he goes, guys. This is it. This is how powerful these dots are. It's capitulation, a software that says the other side is just throwing their hands up and giving you whatever you want. The buyers are running to the gate, rushing to the gate to get out of the product. We know that the crude oil is manipulated by the Saudis, the oil ministries, who's ever fighting over the price of crude. They're trying to take crude down to affect our economy. This is something that's way beyond what we can control. We can just be here to catch this falling fruit. Look at him, it's just low-hanging fruit. 5. All right, crude 5. That's the 5-minute is turning, and here comes the ES. I've got the ES short, the same thing. We're going to guard him, meaning the crude oil, on our, all right, here he comes. He's going to hit us. This is low-hanging fruit. We're going to trap him down here. 5 ticks away, 3 ticks away. He's going to hit us. 66 ticks so far. All right, here he comes. Just let him go. I've got the ES short also. There he goes. Hit us. Now, up 202 ticks and 2 good trades. He hit this S3. Let's go watch the ES. I have him short. His target is down here, 100 ticks away. We have 4 contracts on the ES. ES is $500 per contract. So we would have $2,000 account plus a cushion.
Enter ES.
$2,500 account. He's in an up channel. He's broken this channel. Coming back down to this 50. Let's don't press it over here. He looks like he's going to be, we got 35 ticks on him. Let's just take those ticks, all right? Let's just take those ticks. There you go, 2162. I'm Candace signing out. That's good for me, guys. I do not want to overtrade or risk losing these ticks. 216 ticks today. It is March 18th. We took you from zero to hero, and we don't want to give it back. You guys remember to go sign up for the webinar. This week we have a live Q&A. Bring your questions. Ask any question that you want about trading. I want you to come over here so I can teach you these beautiful day trading strategies using these beautiful, incredibly accurate indicators. I'm Candace signing out, and I'll see you when you get here. Bye for now.